Welcome to this tutorial on SCHD versus SPYD, two popular dividend-focused exchange-traded funds. In this guide, we will compare these two ETFs and help you decide which one is best for your investment portfolio in 2025. First, let's start with the basics. SCHD is the Schwab US Dividend Equity ETF, while SPYD is the SPDR S&P 500 Dividend ETF. Both ETFs track a dividend-focused index, but they have different underlying indexes and investment strategies. SCHD tracks the Dow Jones US Dividend 100 Index, which consists of 100 high dividend-yielding stocks. The fund has a low expense ratio of 0.06% and a high dividend yield of around 3%. On the other hand, SPYD tracks the S&P 500 Dividend Aristocrats Index, which consists of 64 S&P 500 stocks that have increased their dividends for at least 25 consecutive years. The fund has an expense ratio of 0.35% and a dividend yield of around 2.5%. In terms of investment strategy, SCHD focuses on high dividend-yielding stocks, while SPYD focuses on dividend growth and stability. SCHD has a more diversified portfolio with stocks from various sectors, while SPYD has a more concentrated portfolio with a larger allocation to consumer staples and industrials. When it comes to performance, both ETFs have delivered strong returns over the past few years. However, SCHD has slightly outperformed SPYD, with a higher total return and lower volatility. This is likely due to its more diversified portfolio and lower expense ratio. So, which ETF should you choose in 2025? If you're looking for a high dividend-yielding ETF with a low expense ratio, SCHD may be the better choice. However, if you prioritize dividend growth and stability, SPYD may be a better fit. Ultimately, the decision depends on your individual investment goals and risk tolerance. In conclusion, both SCHD and SPYD are solid ETFs for dividend-focused investors. By understanding their underlying indexes, investment strategies, and performance, you can make an informed decision and choose the ETF that best aligns with your investment objectives. Remember to always evaluate your investment portfolio as a whole and consider factors such as diversification, risk tolerance, and time horizon before making any investment decisions.